What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol DIDI for DiDi Global. On the left-hand side, we're looking at the daily time frame, and on the right-hand side, we have the 30-minute intraday time frame. This, of course, will be more of an update since we did cover it when it was trading back around this range in here, and since then, there have been some critical developments, so let's discuss what's been going on. Clearly, on today's session, a move higher supported by some pretty good volume down below. If we just look at the 30-minute perspective, you can certainly see the increase down here compared to what we had throughout the earlier part of this week, as well as the latter half of the week prior. So in terms of volume increasing on the move higher, that's of course a good thing. From the daily perspective, most of the levels that we had mapped out are still holding up. You can see that we've pretty much topped out today at a prior shelf of support, remembering that support turns into resistance when it's broken, and we pretty much came from an area of support which we had mapped out very roughly from in here. I would argue this one was more of luck per se, and not so structurally based on what happened here, but it just so happens that it lines up, right? So 824 still is the area of support to be watching. Again, just kind of a stroke of luck that these lows happened in here and we drew this level in from way back in here. All things considered, though, what are the next steps here? Are you going to remain bullish? Are you bearish? So on and so forth. Let me give you essentially my thoughts here. So the first thing is that if we draw in a pretty steep and aggressive resistance trend line like that, that has obviously since broken using this as the first touch method. We'll do another one from here to here. You can see that's where we tried to back off from. Obviously that's broken, and something like this ideally is what I'm getting at here, has been broken pretty much sideways through time, not aggressively through price, but do know that the resistance trend line isn't really any longer in play. Okay, so that's first and foremost. Secondly, if we take a look at the 30-minute intraday perspective, we had a shorter term resistance trend line, something that looked like this, just indicating that we did have lower highs developing and lower lows, or equal lows depending on how you looked at it, and we've since changed that 30-minute downtrend, right? So to me, there's potential for upside continuation if we can take out this 927, which, just looking at the 30-minute activity here, is starting to act as a pressure cooker top. There was a perfect bull flag into the end of the day, and as you know, what do we always like to do? Look at this through the lens of Fibonacci. So we'll go from the low all the way on up to the high of the first move, and you can clearly see that on the pullback and consolidation in here, we never even got into the 38.2, which is currently sitting at $8.85. So that strikes me as extremely healthy and extremely bullish. We'll clean that up and this time go from the low of the move all the way on up to the high of the entire day, and you can clearly see that again, even from this perspective, the 38.2 was respected on that pullback. So for me, that's the must watch number for bullish and healthy consolidation into the remainder of the week. So cleaning up the Fibonacci's, as long as we remain above $8.91, that would strike me as bullish. We're looking for the breakout up and over this 927 mark to take us into the next major area of daily resistance, and I would argue there's actually an intermediate area in here instead of all the way on up at $10.45. That number I would pay attention to would be here at $9.74. You can see that prior support from in here, then flip to resistance. So a very technical level there, which is worth having on your charts. But after that, yes, the door is open to $10.45, and be on the lookout for that if we do get that continuation. To the downside, underneath $8.90 just about. Are you shorting this thing? Let's take a look at the trade tab here, and you're not going to do it via shares. And if we look at the options volume over here, it's okay, right? It's not fantastic, but it is okay if you wanted to take small size and get into some puts for some downside activity. If we do break down underneath that Fibonacci retracement, it's probably likely we come back down to the scene of the crime, if you will, which is basically today's low. So be on the lookout for 824 to the downside if 890 is violated and if volume starts to dry up, right? If people lose interest in this and volume comes back down to do something like this, I can easily imagine it rolling over and eventually working its way back down towards that level. So you have my thoughts. We are going to remain bullish simply because that's the change in trend here. And again, favor that bull side whenever you see activity like this, but be open to the downside too. Don't be stuck to the fact that if you get long in here and it starts breaking, you should stop out of the trade. It's clearly not working. You don't have to be married to the trade, but we are looking bullish as a first thought here inside of DiDi. So if you enjoyed the video, if you learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.